Hi, I'm Lochlan White. I'm the Chief Commercial Officer of Scope Prime. We're a global multi-asset prime broker based in London, Cyprus, Dubai, and Australia.
Hi, I'm Mark Foulger. I'm the Managing Director of Digital Assets for Rostro, which is the parent company of Scope.
All right, and Mark, looking forward to talking to you and finding out a lot more about your new digital assets product launch that has gone live in the last couple of months.
Yeah.
So tell us a little bit about how that came about with you and Rostro. How did you first get into discussing a collaboration?
Well, it was funny enough. I ran a hedge fund previously that traded in FX and market made in FX, and we moved to the digital asset space. Post that, I was retired. I moved out to Cyprus and stopped working. Thought I would basically sit on the beach all day. Though I've known Roger and Mike for many years, and they came and said, look, we understand that this space is growing, that there's a need to have these sort of products. And in essence, the space is converging with the traditional CFD-FX space. So they came and they said, why don't you come look at what we have and build a product, which was amazing.
And how long ago was that? How many years ago?
It's about a year ago now.
Okay, very good, very good. Okay, so let's talk about the new launch that you've had just in the last couple of months. How long has that been leading up to going live?
Roughly about from the project itself, from the scoping out, pardon the pun, of the marketplace, looking at the different providers, et cetera. We're probably looking at 9 months in total from start to finish to fruition.
It's like your baby.
It is. Very much.
Okay, very good. So what I would like to understand is, I guess, the infrastructure behind the scenes. Before we get into the nuts and bolts of exactly what you've constructed, let's talk about what your vision was of what you were hoping to achieve for the Rostro Group.
So to take a step back, crypto is very decentralized, both in its nature, by how it was created, but also in the liquidity. What I wanted to really provide our clients in a variety of different products, but starting with CFDs, was the ability from one source to get best of breed liquidity. So let me kind of explain that, right? For certain products, for instance, Binance may be the source of truth, or where price discovery really happens. Whereas another product, it may be a combination between market-made liquidity versus, say, Coinbase, for instance, right? Clients don't want to have accounts with 15 different people in order to access that liquidity. Now, one of the massive advantages that Rostro/Scope has is the ability to utilize balance sheet, to utilize their connectivity, in essence, to consolidate all those different price feeds, thus making our clients' lives a lot easier.
Convenience is key. And okay, so let's talk about how you've achieved that. How have you made, like, what have you built that other people haven't been unable to achieve? Why is this unique?
Why it's unique is, well, two things. One is creating order out of disparate liquidity. So that is aggregation, which has been going on for donkey's years in FX and other markets. But in crypto, we don't have the same infrastructure. There's not you can't have a prime brokerage relationship with the UBS, for instance, right? Now there are PBs coming into play, but oftentimes it's not the same ease. You still have to pre-fund accounts at different exchanges, for instance, even through prime brokerage relationships. So we have that ability to both access liquidity through prime brokerage relationships, direct liquidity through exchange liquidity, and thus create a product that takes a lot of the noise out and really provide far greater liquidity than you would at any one single exchange.
That's awesome. You said something to me earlier behind the scenes in the green room about what you've achieved is you've turned chaos into convenience. Can you tell me a little bit more about that?
Yeah, if you have a client, we'll talk about institutional clients here for a second, right? You have a client that specifically wants this product, right? And you find out, oh, well, he has to go to this exchange to get this product. So you have to open an account with that exchange just for one product for one client. That's breathtakingly difficult to do.
And margin inefficient and cash flow problems.
Balance sheet issues, et cetera, right? Where we through the infrastructure that we've built, we have relationship with all of the major, both the direct liquidity providers, as we call them OTC dealers, as well as all the major exchanges. Basically, we can provide liquidity in just about any sort of asset that you'd like.
And sorry to interrupt, but if there was a liquidity provider or an exchange or another OTC provider, I think you just called it, liquidity provider. If there was one that we didn't have within our current ecosystem, is it possible for a potential prospect or client that likes what we've said so far to request for us to add it within the ecosystem? And how would that happen? How quickly could it happen?
Yeah, absolutely. If they can add value to the stack, then we can do so very quickly, either direct relationship-wise or through one of the various prime brokers that we'll use.
Fantastic. Okay, very good. Okay, and what have you found so far since the project has launched? Like, what are you finding is the most interesting positive surprise for you? Whether it's like a pricing or execution or so on and so forth.
One of the big problems that you'll have is the execution speed. So the crypto market is still backwards in the fact that they're still using WebSockets as opposed to fixed connections, et cetera. So I've been pleasantly surprised by the quality of the latencies that we're receiving. Now, that's because we're using as much as possible institutional grade infrastructure in order to connect to all the different liquidity sources that we're using. So I've been pleasantly surprised. It's not perfect, but I've been pleasantly surprised by how quickly we are able to take the client order, determine the best liquidity, create price discovery, and fill that order in a very quick and orderly manner.
Nice. And what about the volume? Like, obviously everyone talks about top of book spreads, right? Like, particularly on my side of the business, my side of the industry, where there's a lot more about having a competitive top of book spread. It's what everyone compares you against. What about the rest of the book, or what someone recently that I know termed it a value at depth. So I really like this term of value at depth, and I think from what I've seen from the product, especially over the last few weeks, the liquidity is significantly better than many of the other counterparties or some of our competitors in this space. How have you achieved that?
Well, there's a discrepancy in terms of the liquidity that you see. Oftentimes, the liquidity that you'll see from exchanges, for instance, will have a very tight type of book.
Okay.
And that's what everyone kind of sees. Oh, that's great. We'll trade on that zero spread in essence, right? But if you look to get filled on it, even in one BTC size, which is literally nothing, you're looking at maybe 3 to 4 basis points, so $300 to $400 per million in terms of slippage that you get on that fill. Where our depth comes from is not only that top of book for small orders, but also the OTC providers. So we have tier one market makers that price us directly, but also based on our flow characteristics. So based on the sizes that we expect, et cetera, we are able to also do off-market deals with them, et cetera. So if there's large size coming in, then we can get direct pricing from them for those large orders that they can work out of. One of the things that we will start doing as well is adding in our own price, our own SKU. We are not going to have this as a back-to-back model for a super long period of time, thus aggregating the liquidity and putting it out there. But where we think we can add value is by creating not only deriving our own price, but creating a SKU off that price. So when we're creating inventory, we create a SKU in order to get out of our positions, thus giving an advantageous price to our clients on that SKU. That's coming up, but that's what we're working towards in the background.
I love it. I love all the little things that we've got. Like, considering how good the product is already, it's super exciting to see what we've got on the roadmap. By far, this is our biggest product interest for our existing client base. It's just, we're creating so many conversations, so much interest, and truthfully, so much volume already as well, considering it's only just launched. So it's really good. What else can you tell us about what you are looking to achieve with respect to the product range itself, like the number of coins?
So product range itself, right? Like, we'd like to go 200 initially. I think that's what we're targeting. And then growing out to anything with some depth of liquidity, like over 100 million market cap. I think actually the most interesting part is our ability to create separate products. Then right now we're starting with CFDs, contracts for difference is our bread and butter.
Yep.
We're going to move to having that CFD product, but also a perpetual type product where we take the pricing in, and thus we create our own book based on the risk parameters that we see. Now, what does that mean? It means for clients like hedge funds that come in, right? And they'll run, say, basis. So they'll be long spot, short the derivative product. They can use us because we'll send out our own funding rates where they can actually trade in a delta neutral manner. So that'd be quite cool. The second product that we're looking to put out there is a delta neutral product versus, say, CME. So it's a convergence trade where we can, or a spread trade, I should say. We can put out a product with a spot component as well as a dated futures component, and the client can trade that very simply in one ticket. So we have the ability and the wherewithal in order to create not only the TradFi, as I call it, the TradFi sort of symbols like for CFDs, but also we're moving into the more of the crypto native products like perpetuals and like spread trades as well.
Okay. And for hedge fund, like, can you run me a little bit through the digital assets or, hedge funds that trade digital assets and what the strategies typically are? I'm quite unfamiliar with that space.
Honestly, the basis trade is the big one, right? Generally what you see is that retail clients tend to be long BTC, and for good reason. It's gone up, right? So that's what we see and what everyone sees. So when you have, especially on a perpetual product, long interest, what happens is the venue does two things. They'll skew the price and they'll modify their funding rates based on their book value. Same thing that we will do with our perps product.
Sure.
So what does that mean for a hedge fund? Well, they'll go, okay, well, I can get paid 20% for buying spot, shorting the perp. They'll put that trade on, basically. It's free money. And they'll leverage it as well, obviously. So that's one of the things that they look at. What you also see is a deviation in mid between pricing from the different exchanges. It's one of the reasons we get pricing ourselves that beats anyone, because we were able to aggregate that decentralized market into one place. So what hedge funds are looking for is the ability to buy and sell on, in essence, an inverted price. So because of the deviation in mids between different areas, triangulation, if you look at, for instance, BTC yen rate liquidity, it's poor. So what happens if a retail client comes in and takes out like the first 5 levels of BTC yen on exchange? Well, you can triangulate that back with a US dollar trade versus yen, et cetera.
Can I just ask you, like, this is actually quite basic financial markets question here, but the reason that there is such a heavy skew, is because of the skew towards arbitrage strategies, is just because there's so many exchanges, right? Like that's it, because there's okay, cool, understood. And obviously all the arbitrage strategies, that's ultimately just improving pricing for everyone, keeping everyone in line, and that's how financial markets work.
What's great about the crypto markets as well is what you're able to do is not only arbitrage versus the centralized exchanges, but also the DEXs or decentralized exchanges, things like Uniswap. What they work on is what's known as a constant product model, which is X times Y equals K. And that's what we're trying to do is balance two tokens. So you've got dollars versus Bitcoin in a decentralized model, and they're reliant on arbitrageurs coming in order to put price in line with the market. So there is other areas that funds can use in order to access, alpha, basically.
Yeah, wow. Like take this product from, I guess, more institutional, PB level and bring it and trying to cater to the CFD market.
It's interesting. My assumption would be that a lot of the competitors would just be using a single provider. So if that provider has outages, then they're screwed in essence, right? And that's where you see the liquidity. What happens on most clubs or most exchanges is that you get a very tight top of book, because that's when, if they do have market makers pricing into the exchange, they'll price there to get out of risk or close to that point. But then the depth below that falls out of the way.
Yeah, it's weak.
So we basically have solved it, so to speak, and no one's solved it. But our product is better for two reasons. One, we're aggregating more than one venue. So we can get the best of different exchanges into our product, but we're also solving it via having direct market makers. And the direct market makers tend to be better at larger size. So if you're looking for a fill in, 3 to 5 Bitcoin or above, then we're able to facilitate that because those market makers want to take that order and work it, right? So they'll be more aggressive in terms of their pricing than the exchanges will be, where it's simply a central limit order book model.
Nice. And I know, speaking to some of my broker clients, that's what they're looking for. They're not just looking for a central limit order book solution. They're looking for value with skew. In the price. They're looking for, obviously, value at depth, as we said before, and they're looking at more stability within the price. And I think when it's purely a central limit order book or a club, it can at times be weak. During periods of illiquidity, comparing our competitors to the Rostro digital assets product, ours stands up, far above theirs. One of the things that I'd like to touch on just quickly is about margins, margin requirements. Do you want to give, I'd love to hear a little bit more about your side of the margin space, and then I'll talk about my side of the margin space and what clients are looking for.
Yeah, margins are interesting because there's not, like I said before, the real prime brokerage model. So we have to take a risk-based approach, right? And it's not just the risk in terms of the price or how quickly the price will move, because obviously we know that crypto can be incredibly volatile. But it's really the concentration risk is what we're looking at. So if a client is just basically passing just his longs, because that's where the risk lies, right?
Course,
Bitcoin can go up, $10,000 in a single candle, and then you get wiped out, right? So what we would need to have is more margin backing that. If the flow is two-way, we can be very aggressive because, in essence, that's netting out. We'll naturally net out our positions with our different providers, thus creating a real prime brokerage experience for our clients. So it really is dependent purely on the flow. Now, if someone comes to us that is very high frequency, I love that. And a lot of people won't like that because maybe the decay profile of the flow looks poor to a market maker. Well, with the model that we're utilizing, using both central limit order book liquidity and OTC liquidity and combining it, we can design a feed that will be absolutely fine with very, very quick, very high frequency type trading. And with that, we can go margins of less than 1%. If it's in and out and there's no risk, then we want to give you more ability to trade.
Absolutely. That's the type of... Yeah, and I think that's quite interesting and unique, I guess, amongst all of the asset classes that we offer, right? Because everyone talks about markouts or decay curve in FX and precious metals and really every CFD. So what you're saying is we're less sensitive there. We're open to any sort of flow, and we can handle it, and it can be mutually beneficial for the client and for us.
Yeah, absolutely. Give me the most toxic thing possible. We can get a feed out there.
I love that.
That will still be very good top of book. We'll still have some decent depth to it. And that you're not going to have calls from us going, oh, we don't like this, can you turn this off? That will never happen.
Okay, cool. And then just talking about margins, typically the margins with any PB, let alone crypto PB, I assume are relatively high. And I guess that's another benefit of or unique advantage for Scope and the Rostro Group is that we have a solid balance sheet. We have a very, very healthy balance sheet. It's grown significantly over the last 3 years post the acquisition of all of the Scope brands from the Rostro Group. And it's something that you lean into. It's what has created the prime of prime space is credit intermediation. And that's why we exist, and that's why we will excel. And I think the crypto or digital assets world is one where we can really lean in because margins are typically higher than in FX. And not everyone can participate or play in this space. And I think we're doing a really great job so far.
Yeah, just to add to that, think about it. We talked earlier about how different products have different sources of truth, right?
Yes. Yeah.
So if you're a provider, you need to have margin at, say, 5 different exchanges. That's difficult. And we do that. We manage that. It's one of the big advantages that we have is we provide, in essence, pre-funding for our clients' trades at various different venues, as well as through cleared environments as well. So that balance sheet allows us to access that liquidity. Without it, it would be incredibly difficult.
Okay. What would you say, like off the top of your head, just Bitcoin, for a client of ours to go and reconstruct our setup?
Yep.
What would the margin multiple be compared to what we give the client? So if you're saying 1%, they're probably looking at 50 times, right?
Oh, yeah. So there are PBs in this space. They're not like a proper PB as we just discussed before. Sure. They still make you have inventory at various places. But with our PBs that we use, we get 5x.
Okay.
So for instance, so literally we can take that and we can multiply it depending on the trading style.
Interesting. One thing, like I love talking about spreads and execution, right?
Yep.
Like that's typically how every single conversation, it always touches on spreads, execution, and it always will. But one thing that I really, really like about this product is something that people very rarely talk about. And, I'll have a conversation with a broker and, or any sort of financial institution, and they will say, what are your spreads? What are your commissions? What's your execution? And what's your financing or swap rates? So they're trying to cover all of the things that would cover commercials to get an understanding, right? But what they rarely, and what, the industry rarely speaks about is outages and price stability. And, this is a place, this is particularly an asset class that can move significantly in a short space of time. So outages can cost millions or tens of millions to certain institutions. So I really want to lean into this because I know how solid our product is. It's very robust. We've, as you said, spent 9 months putting it together. It is your baby. What aspects of, as this was being built, what was in the back of your mind, and what sort of things did you put in place to make sure that there was always price stability and reliability, redundancy, those types of things?
So the interesting thing is we have two basically feeds coming into our client execution venues. So if one goes down, we have failover at all times. So that's the core issue you get off times with outages. You have one feed going in, and then it goes down. Well, we've got two separate feeds going in from separate areas, going into each of our execution venues for our clients. The second thing is, as we discussed before, oftentimes liquidity providers are just getting liquidity from one exchange. We're getting liquidity from multiple venues, not just exchange liquidity, but market-made liquidity in different areas of the world as well. So we're connecting via WebSocket to exchanges. We're connecting via direct connects through LD4, for instance, right? So we have both variation in terms of how we're connecting, where we're connecting, and who we're connecting with. And that takes balance sheet, as we discussed.
Yeah, it's really interesting, like that sort of the stability and robustness of the product in crypto CFDs or crypto CFD liquidity around the world. It doesn't seem like it's there with many of our competitors. FX is obviously much more mature. And I think that any real liquidity provider has like 99.999% uptime. But you don't see that in the crypto side of crypto world at the moment from a liquidity perspective. And I think we are one of the first to actually implement that. And I think that is one of the, at least that's what I'm seeing from the prospects and the clients that I speak to about the product. That's one of the key areas. Obviously, we tick the box with the spreads. We tick the box with execution and service and connectivity. But the reliability of the product to always be there and be stable is the key area that my clients are really appreciating.
That's very good.
Yeah.
One of the things that we looked at when doing it. It's that I think I look at it as really as a prime in this space. And that's, or at least a prime of prime. I remember like 10, 15 years ago, not showing my age here, of like when the first prime of primes came out in FX, right? And they were providing, UBS and JPM liquidity into a stream for others to trade on, looking at the markouts, decay curves, and creating streams for them. I think we're the first. Maybe there's one other out there. I think we're better than them. That's doing that though. That I think that's one of our biggest advantages is really looking at the trading profile, looking at the flow, and creating a product that works for them based on their client flow, based on their client type. And we can do separate streams, etc. We have the ability to create bespoke liquidity on a per client basis, and I just don't see that in the crypto space.
I agree. I know that's not happening. I mean, you know, in the past, Scope has utilized some of what we now consider our direct competitors. And there was always just a compromise in some particular area. Like they'd always let themselves down in some area, whether it was, you know, pricing, stability, whatever, or value at depth or depth of market. That's also a good point. You know, the Rostro Scope Group is a very global company. We've got 260 staff members around the world. We've got some very interesting and exciting developments throughout Asia coming soon. I won't announce those just yet on this podcast. But we obviously have a range of key different offices around the world. And I will lead into why this touches your product in a second. But obviously we have, you know, 50 staff in London. We have 20 staff in Cape Town. We have 110 staff in Cyprus. We have 15 to 20 in Dubai, and a new Asia-based office opening very soon. So we are rapidly expanding, but what this means for our clients is there's 24/7 coverage. And I know for a fact that a lot of my clients, one of the things that they say is, look, we love your product. Everything makes sense, but are you going to be there to answer the phone or respond to that chat if there is an issue or if we have an inquiry? And the thing is, yes, we will. We offer 24/7 chat support. Our dedicated technical experts are available on Slack, Teams, and over the phone, and email, of course. And that's something that I don't think is readily available right now on the digital asset side of things. I mean, I'm curious to hear your thoughts.
Well, it's actually funny, you know, from the digital asset, let's call it the native digital asset space. It's 24/7. It's always been 24. Coinbase, Binance, et cetera. They're all 24/7. It's the TradFi, the CFD providers, that's moving towards that.
People don't want to give up their weekends.
No, fair enough. You don't want to get the alerts and all that sort of fun stuff. But we are about to launch that. So depending on when you see this, we may have launched it already, but it's been a priority. We don't have a fully fledged crypto product unless you are 24/7. That's where the market came from. You can trade 24 hours a day, 7 days a week, 365 days a year. On Christmas Day, you can trade Bitcoin. So that's a big variance from what everyone's used to.
Question for you. Have you traded Bitcoin on Christmas Day?
No, I've not.
Okay, I was going to say, because you might not be a married man for very long if you're trading crypto on Christmas morning.
Wouldn't be very
As your daughter's opening presents, you're placing orders.
I've not. I have looked at pricing. That's as you do every day.
Of course.
But I've not traded, thankfully.
So what are you most excited about for the second half of this year with this project?
Well, it's what's coming up, right? CFDs, we think we have the best and most robust CFD product, but it's also the perps product, the spread trading product, et cetera, that we're looking to put out there, taking a crypto native product and putting it in the TradFi world. In future, we are looking at getting a fully fledged VASP. So what does that mean for us? It's really two things. The first is we can offer any cryptocurrency, any digital asset as a custodied sort of product. So if a client wants to trade, I don't know, roll Bitcoin, for instance, right? What they're able to do is come to us. We're able to get liquidity off of the decentralized exchanges, things like Uniswap or SushiSwap. Some of the names are very ridiculous, in all honesty. And get that liquidity and provide it for the client. So we're able to merge the real decentralized world with the centralized world, provide a custody solution for our clients. I think that's going to be groundbreaking when we're able to do it.
Cool. Anything else on the agenda, on the road? I know there's a lot on the roadmap, but maybe anything I've not heard about?
Well, what I'm comfortable saying is there's a lot, but besides in essence, the custodied or brokered product, et cetera, for physical crypto. It's a bad term, physical crypto, but you get what I'm saying.
Is that the correct term?
I don't know, spot.
Spot?
Yeah.
Okay.
Besides that product, then we're also looking to do payments. You think about the stablecoins. Stablecoins are a big topic these days. There's a report by Citibank who's getting into it now. Some of the biggest institutions in the world are getting into stables. And with this VASP license, once we receive it, we'll have the ability to provide our clients payment rails in stables, USDC, USDT.
Yeah, it's
We'll have a
massive.
relationship with the factory, so to speak, of all of these stable coins. There's Euro coins coming out, Sterling coins coming out. I think what you're going to see is actually governments in many of these places wanting to have their own stable coins. Why? Think about USDT. USDT is the fourth largest holder of US treasuries, right? Yep. It creates a sink where treasuries are held, and the governments love it. That they want people buying their debt, right? So I think stables will be a massive part of what we're going to be doing in future.
Has been, sort of the talk of the company for quite a while. It must be satisfying for it to now be live, out in the open. Clients immediately trading, everything's heading on the right trajectory. There's no issues. The only questions that are keeping you busy is, keep building more coins. Like, is it satisfying?
It's a relief actually, because you come in with an idea, right? You sit there and you go, okay, I think this will work. But what you're really doing is, as I said earlier, centralizing a decentralized world.
Sure.
It's a fragmentation, putting it all together.
Come on, we've got to talk about sex versus DEX.
Sex versus DEX, yep. But that was a relief because in theory it works. Yeah. In reality, does it work, right? With things we talked about before, will the execution work, right? Will there be enough liquidity at these venues you're in essence putting together in order to fill client orders? And now that it does work, it's sort of like, oof, like all that work actually came to fruition because it may not have proved.
What about now that we're live, resources? Is this a call out for additional talent around the world looking to join the team?
Yeah, well, the great things about crypto is there's lots of smart people, and you can be anywhere generally.
Sure.
So yeah, we're in essence we're creating 4 verticals here. The one thing we've not touched on is the hedge fund, which we will be establishing. We're in the process of establishing right now.
Yep.
So in my mind, what that takes is someone with almost crypto nuance that understands like where yield comes from on dexes, where yield comes from on money markets, that understands the curves of a constant product formula and how you can hedge it out with, say, option services. Right. Like, it's very complicated, but that's what we're looking to do. And that's where, because it's complicated and it's a bit esoteric, that's where you can create yield.
Fantastic. Should we just touch on the hedge fund for a couple of minutes at the moment?
Yep.
So my understanding is it's looking to launch in Q1 or 2 of next year, if I'm not mistaken.
Hopefully late Q4, but
late Q4, even better.
Yeah.
Fantastic.
Yeah.
Okay, great. Are we allowed to talk about where that's domiciled?
That's Cayman Fund. Yep.
Cayman Fund. Fantastic. And what are we open to investors?
Yes, absolutely. Minimum investment is 100K.
Okay.
Obviously, you have to have some semblance of professionalism in order to sign up. But and what I think the advantages of the fund are non-correlated yield. The fund is split up into what are known as SPs. So there's a master fund and then 3 separate SPs.
Yep.
Each kind of focused on its own area and each having their own risk tolerances. One is what's known as a liquid token fund, which basically uses TradFi metrics. Some of these protocols make huge amounts of revenue, and you can actually use bank type models to determine what the valuation should be. And that's really what we'll utilize. However, that being said, it's a heck of a lot riskier than equities because it's a token, right? And it doesn't give you any ownership. But what I've done in the past is outperform based just using those metrics. So that's one fund. Second SP is what I call the delta neutral fund, which is basically using things we spoke about, such as basis trading, triangulation, arbitrage, in order to create a price agnostic sort of vehicle for our clients. So looking to create yield off of taking no price risk and using large liquid venues. So generally that will be less risky. With a liquid token fund, will be super risky. In the middle, what we have is what I call decentralized fund.
High risk, not, we'll just say high risk.
High risk, yeah. The decentralized fund kind of sits in the middle. It's using a lot of the same strategies that the traditional fund would use, or the delta neutral fund would use, things like basis trading, et cetera. But what you can do is model out front end yield. So in essence, both sides of the trade, when you're basis trading, you can generate yield on. It has a bit more risk because of things like smart contracts, the hack risk, et cetera, that you get in crypto, but the yields, in my mind, make up for it. So what we've done is we've segmented these 3 SPs separately based on the risk profiles, and they'll each trade separately in their individual way.
Very cool. Very interesting. Yeah. Looks like I need to get some money together so I can make my investment. But that's super exciting.
Well, I think we should open up to the staff as well.
Absolutely.
Do some risk profiles on everyone.
Definitely. When exactly do you think it would be? Like, would it be this year? What's holding us back?
What's really just the application. We've created the actual formation of the company, and it's going through picking the right auditors, getting the right structure in place around it, the fund administrators that we're putting together.
And what's the? Do you have any idea of like expected performance, and what is the benchmark?
Well, that's interesting. Something like a delta neutral fund should be benchmarked against basic, because all you're looking for is your return in dollars. So that should be benchmarked versus something like a treasury yield, in essence.
Okay.
Whereas a liquid token fund should be benchmarked against BTC.
Yeah.
Generally, that's what crypto funds
sense.
do.
Yeah.
So it depends on the SP. Something that we're just trading in essence, risk-free or price agnostically in order to generate dollar yield should be based against the dollar. The crypto DeFi fund, let's call it, I'm not quite sure. Maybe ETH, potentially. Because in essence, that is looking for dollar yield, though, in essence. So again, that should just be treasury rates.
Okay, cool. I feel like we've covered a lot today. Yeah, look, it's been a lot of fun today. Yeah. I feel like we could have gone on for hours, but yeah, I've really enjoyed it. Hopefully, I'm flying to Dubai in 2 hours or 2.5 hours if I make my flight. But yeah, really enjoyed it, mate, and hopefully we can do it again soon.
The one thing I would say, if any clients watching this, right, we're looking at different ways of working within the digital asset space. If there's something that you're looking for or want, we have access. So feel free to reach out. We're always happy to speak and determine what your needs will be.
Perfect.